right, people, we're moving to the last topic and one of the most important topic of this chapter. One of the most important topic, a big chunk of mark being covered by called VAT return. Okay, before starting this, just giving you a starter talkie here lecture or gist, the knowledge. In real life, we have to prepare the VAT T accounts and transfer from those T accounts. We need to extract the VAT information and put into the HMRC VAT form. You know, the form from the HMRC. It's a box form. Like how much, in simple words, how much VAT we are liable by, how much we have to give it to the government, and how much we can reclaim. That's the calculation we need to show in a VAT return form. Yep. We need to do every quarter. We need to do that return on a standard VAT business. There are some different rules. Annual VAT return. There's a cash scheme. We're gonna learn it next chapter. But generally, every quarter we need to do it. And what exactly comes in those return? We're gonna check it out now. Some 9 boxes you're gonna see, and each box, into each box, what you write. We will go thoroughly and we will practice one big example, one activity, and I will give you one test your understanding on that, yeah, and hope it will make more good sense. Okay, remember the VAT return, there's a form called VAT 100 from the HMRC. Summarize the VAT account. These will show output VAT, input VAT, the net amount payable or reclaimable. They call it repayable sometimes, which is basically reclaim from the government, from the HMRC. Okay, now just showing you the 9 boxes from top to bottom. Let me show you what goes in it. Box number 1. What do you mean by box? Don't worry about it. It's not a big box from Amazon. These are your box like tick, like what comes in here. Some figures you write. For example, some figures. The boxes are given to write some figures, 2,100, whatever is the figure, yeah? So, but these boxes, those are VAT expert, especially the HMRC people. They are very much familiar with these boxes. Also, the tax consultant, when you become a tax consultant or VAT consultant, then you're going to be very much familiar with these boxes. So it's good to be familiar now and memorize it for most of your lifetime. If you are a tax expert, you need to remember it. If you are just auditing and other stuff, that's all right. Still, for the auditing purpose, we need the knowledge of this. So box number 1, what do you write? Look at the writing. We're going to read them and I'll explain. VAT due in this period on a sales and output. So much straightforward lines. In short, VAT on your output. VAT on your output means sales and income and all. But they're giving you more breakdown. They're making your life easy. Like what comes in it? VAT due in this period and sales and other outputs. What comes in it? These 1, 2, 3, 4 items comes in it. I didn't see anything comes out of this. The first thing comes is the total of the output VAT on sales. It could be credit sales, it could be cash sales, no matter, in short, sales on VAT, number 1. That comes into the box 1. Let's assume £10. Then less the VAT on your credit notes, means sales return. Could be, or discount allowed, could be. Let's assume 2, which is minus £2. It's a VAT only, okay, people? Plus any fuel scale charges. Remember for the last 2 weeks, fuel scale charges means it's your liability. There'll be a scale given and it is VAT inclusive. Yeah, you need to do 1/6 and get the figure, VAT figure. That's what you are liable to give it to the HMRC. So I'm taking it as £1 VAT. This is just generally I'm doing imaginary figures. Plus adjustments for earlier period errors. Now, what do you mean by adjustments? We have already seen there could be some mistakes and errors in the VAT, which we need to adjust in the next period. If we have any VAT error in this period, adjust in next period. Or if we are doing already this period and had any error in last period, from previous period's errors, we need to adjust in this period. And this adjustment actually makes your, it could make your liability up or down. This adjustment makes your liability up, let's assume £2, but there could be an adjustment in the purchase. Adjustment into the purchase. That's what you need to do the adjustment. Mostly it will be an addition, plus. They're talking about plus. Plus means you are liable. You are liable. The liability goes into this box, output box. And the reclaim, if you can reclaim, which goes into the box number 4, we're going to talk about in a minute. Yeah. So because of the error, your VAT either could go up, either could go down. When you adjust it, your liability or reclaiming gets either up and down. So that's how we're going to do it. It's the liability up, right down in box number 1. Means it's the box number 1 is all about your VAT liability. Yeah. So starting with the output VAT, less any VAT on sales return or discount, plus any fuel scale charge, plus any more liability of the VAT because of the error from the last period. That's box number 1. So what did you get from the box number 1? 10 minus 2, 8, 9, 10, 11. I got 11. That's it. That's my box number 1. If I have a box here, I'm going to write 11. Box 1. We do have some boxes at the bottom. Look at this. Box number 1, 11. This is the boxes. Box number 1, 11. Like this, we're going to do until 9. Only box number 1 and 4 is slightly longer work. Rest is straightforward copy paste. Second one, box number 2. Read it. The VAT due on any acquisition from the EU, European Union countries or EC countries. If you remember from last chapter or last lecture, if you buy anything from European countries, at the first, on the same VAT return, at first you need to show it as input VAT, then output VAT. That means VAT gets neutral. So it goes into input VAT as well as output VAT. So in the box number 2, we just write that figure. Let's assume that figure is £3. Let's assume that figure is £3. Box number 3 is addition of 1 and 2. Now you can ask, oh, they could have done the box number 2 into box number 1. Like, why making it so separate? Because it's a purchase from the outside of the country. We are just highlighting it separately. Yeah. So here we're showing it as output VAT, but acquisition from EU is both your input and output. All the input VAT in box number 4. Do remember, please, input. In just less than a minute time, I'm going to discuss. But before that, I said box number 2, our EU acquisition VAT is £3. So let's go to our box number 3 here at the bottom. £3. And how do you get box number 2? £3. What is the box number 3? Is the addition of 11 plus 3 equals to 14. That's my box number 3. I hope you people are okay with box 1, 2, 3. Going to box number 4. Box number 4 is about input VAT. Let's read it. VAT reclaim, input VAT you can reclaim. In this period on purchases and other inputs, I will show you what are the other inputs here, including acquisition from the EEC, including the European countries or Commission. Let's start with the first one, easy one. The first one, the total of the input VAT on purchases and expenses, yeah, included credit and cash purchases, any figure. So let's put some figures in it. Purchases would be less, so I'd rather put here £8. Let's assume we can reclaim £8 and less credit note, VAT on credit note £1 less, lesser, and then plus the VAT acquisition on EU. It would be the same as this one. Where is that? Plus the VAT acquisition on EU. It's £3, so we can't change it. What about EU? VAT is the input and output base is, VAT is the same thing. Plus bad debt relief. You remember the bad debt relief you have on VAT, because you already have paid the VAT to HMRC, but the customers went bankrupt and you can't reclaim it from the customers. You can't get the money from the customers. So the VAT on that much money you can reclaim back from the government. That's, I'm writing £1. Let me make this purchase little more down. Purchased, we did £6, yeah? And plus any adjustment from the earlier period. Like because of a mistake, you lost some VAT last period, could be. Now you are adjusting it this period, you can reclaim it back. Let's assume to £1. So 6 minus 1, 5, 8, 9, 10. £10 is VAT reclaimable. £10 is VAT reclaimable. Let's write it down in our box number 4. £10. Now look at the box 5. Again, the easiest one going to be, it's just the minus of output and input to get the net VAT, right? Net VAT to be paid to HMRC or reclaimed. It could be a reclaim, it could be a paid. This time we're going to pay it because our output VAT is higher. What do you do is deduct box number 4 from 3. If box 3, which is output VAT, is higher, is greater than the box 4, then there's a payable, obviously payable. If our output is higher, payable. If our input is higher, reclaimable. Let's check it out then. Net VAT payable to HMRC Revenue and Customs, the difference between box number 3 and 3 is £14, and the 4. So what is the difference, people? 4, isn't it? My quick question to all of you. Let's see who gives me the right answer. There was a question, will this be the same for services from the EU? You know what, services, you cannot bring it into the United Kingdom, yeah? But there are some rules for accounting services. It depends where is your customer based, or where is your, are you taking the seller location or the customer's location? Okay, these are not examined, but generally you're learning as well. It's from COCO. I mean, the services provided to the EU. You know, the provided COCO, you're asking another question, that the services provided, that is not an acquisition. Yeah, that is a sales, dispatches. Yeah. So if it falls under the category of VAT, definitely you need to take into account. Okay, so my question is this for box number 5, £4, is it a liability or is it an asset? Can you reclaim it or you have to pay it? The box number 5 on the screen, I have written £4. Is it a VAT payable to HMRC or you can reclaim it back from the HMRC? Okay, Kujinder, Coco, Dave, and Xavier, all of you are well done. Very fantastic. Absolutely payable. Yeah. And other people, Pyle and Jordan, those of you writing. Now, if it is a reclaimable, you'd have written this way, minus. Yeah, minus. But this is not a minus. You'll have to pay it. Now, people, and from box number 1 till 5, you can do like decimals. If there is any decimals, you can take it as decimals, like 4.12 or 10.10, 3.02, could be. But from box number 6 onwards till 9, whole pound only. No penny. You cannot take. You shouldn't take any penny. I'm erasing this bit. Yeah. All right. Let's go to our example, because it's just the example we're talking about. Let's read through what they said about here. Boxes 6 to 9 deal with the sales and purchases. Okay, they're telling you what actually we do. Box number 6, 7. We write sales. That's box number 6. And box number 7, we write purchases before any VAT. What do you mean by that? It's the sales daybook and purchase daybook total we write before any VAT is added. Means VAT excluded amount. Let's assume we sold 20,000 worth of goods. 20,000. That's 20,000 you're going to write in box number 6. Accounting records such as purchases daybook and sales daybook journals will be needed to complete. And also they're talking about the note that boxes 6 to 9 are stated in whole pounds, no pence. Yeah, that's, I said it. Sales less sales return. It's not just sales less sales return. And all the sales you need to write it down. All the purchases you need to write it down. Let's check out the box number 6 and 7 in great detail. Box number 6. Total value of your sales and all other outputs, excluding any VAT excluded amount. What comes in it? This is the total of all sales. Now, all sales could be standard rate sales, zero rate sales, exempt sales, supplies to the EU member countries, dispatches, yeah, not acquisition. These are all sales, less credit note issued. Yeah, just to remember it, like you're selling £30,000 worth of altogether, less £2,000 sales return or credit notes, discount allowed. So 28,000 without VAT, you need to bring it to the box number 6. Now I can put some imaginary figure, £1, £1, £1, and £1, altogether £4, and minus a sales return of £1, which is a minus. So minus 4 minus 1, ultimately £3. That £3 is your total sales. Let's put one more 0 here. 40 minus 10 is £30. £30 is your total sales, because sales would be bigger than the VAT. 30. Yeah, that's it. So box number 6 is what? It's all about the sales less sales return and discount allowed. Sales less credit note. The whole category of sales. Okay, it's not the VAT. It's not the VAT. It's excluding the VAT. It's just the sales amount of money. How much money you received. Number 7 is about how much money you purchased for. How much money you paid. Total value of purchases and all other inputs excluding any VAT. This is the total of all purchases and other expenses. Could be other expenses as well. So less credit notes received when sales return discount received, excluding VAT. The standard rated. We can put some imaginary figure here. What figure shall we put? We should put it at £6. 0 rated supplies, including the imports, exempt supplies. Acquisition would be acquisition. This acquisitions means the total purchase, not the VAT yet again. These boxes are not the VAT. Let's keep it same. 24 £24, but the credit note could be £4. Let's assume credit note minus £4, so 20, and that's it. That's what you write into the box 7. 20. These boxes are very easy peasy. How much you sold to supplied to European country member, how much you purchased from the European country. This purchase is already here, and this sales is already there. Like, let me take you here. Total value of supplies of goods and related costs, excluding any VAT to the European country. This figure is also included in number 6. This is the, where is that? Look at this. The one I did is star, supplies to EU member country. This £10. So we can write down here £10. £10 is our we dispatched or sold to European countries. Something they said here, we should read it. For the purpose of this assessment of your exam, you should not include in box 8 the value of goods supplied to EU members who are not VAT registered. Please do remember that one. Yeah. That's an important note. All these are given in the reference material, but if it is a not VAT registered EU customer, so we don't put that money into box number 8. Yeah. We don't include, you should not include that into the box number 8. Means this box. Yeah, rest is fine. Last one is about total value of the acquisitions, goods and related costs excluding the VAT. It's just the acquisition. This figure is also included in box number 7. Acquisition, this is the one I'm doing the star. Well, box number 7, or £6. That's your £6. That's it. 10 and 6. 10 and 6, and boom, job done. Yeah. Actually, until your box number 5 is your VAT information. Until your 1, 2, 3, 4 gives you, and 5 is the equals to, that gives you VAT information. Rest is your sales and purchases, and also European sales and European purchases separately given. Yeah, so many decisions needs to be taken for that reason. Information for box 1 and 4 can usually be extracted from which account, people? VAT account. How much is output VAT? How much is output VAT? Box 1. Input VAT, box 10. Even acquisition from European countries, that's also VAT information. So you get from VAT accounts. But where do you get the sales? This sales, box 6 and 7. Sales and purchase information from sales daybook and purchases daybook. Okay, if you people do not have any question, we can do the same thing. We can do a real life question, illustration number 2. I will do it thoroughly. Then I will give you one activity. That's what you need to do. So stay focused throughout this illustration number 2. Completing the VAT return. Okay, I think we are good to go. So yet again, the same scenario from box 1 to 9, we are going to do the information given on the screen based on the information. Similar information will be given on your exam assessment. You need to examine it, check it out, extract whatever you need, put into the boxes and get the full marks. Okay, showing you what informations are available. Quickly reading first few lines. This illustration shows how the business and accounting records are likely to be presented to you in the assessment. Okay, thank you BPP for telling us. The relevant ledger accounts are shown below for the quarter ended, first quarter, 31st March 2000, whatever. I don't understand. Like most of the books, they do it. They're very lazy. They don't want to change it every year, you know. It's difficult, like every year they need to change the books. Put some years, 16, 17, 18, why the X and Y? Okay, okay, no excuses. Coming back to our question. Look at this. This is a sales and sales return account. Yeah, it's a T account given. So there are some sales day book information given. UK sales day, EU dispatches means again sales, dispatches means sales. Export means out of UK, could be China, could be whatever, USA. Then cash sales. Your total sales is this. Yeah, total sales is this. Then of that, you have got sales return and got the balance. Okay. Then you got a purchase and purchase return account, and purchase is debit account. Purchase on the debit side, you got some UK purchase, EU acquisition. This EU acquisition VAT going to be used in different 2 boxes. Box number 2, box number 4. Also, the whole purchase is going to be used in one of the boxes. Last box, isn't it? Yeah. That's why you need to memorize the value of all acquisition EU member. Box number 9, this whole purchase 3 to 5, 6 would be used there. Some more purchases that there. Purchase return is there. Now, those were sales and purchase related information. This is your VAT information, people. Look at the screen. Yeah, VAT on your sales day book, cash sales, sales return, purchases and purchase return, VAT. So your what do you call it? 1, 2, 3, 4, and 5. All information is there. Little more needed. VAT on acquisition, European acquisition needed. Most of the items is for the box number 1, 2, 3, 4. Most of that information is here. Especially these 2, and that one is output VAT. And these 2 input VAT. They're little more. Look at the highlighter one. The following journal entry has been made to reflect a bad debt to be recoverable for the VAT purpose. Do remember, it's a bad debt in short. Bad debt debit, VAT debit, and SLCA credit. That means Where does the VAT on bad debt goes? Yeah, if you remember, box number what? 4, doesn't it? Let's check it out. Box number 4. Plus bad debt relief means it's a good thing, you can reclaim it, isn't it? Box number 4. Yep, that's my VAT. I can reclaim it. But in addition, you're told that fuel scale charge, where it is, isn't it output? Yeah, output, box number 1. Box number 1. And that's great. VAT on EU acquisition is given. VAT on EU acquisition is box number 2. Also, box number 4 as well. Yeah. Hopefully it's all right so far. Let's do the question together. They started with the workings. In fact, in the workings, they did everything, but it again, they did the box for you people. So let's do the working. The first one is the box 1, and we know VAT on sales, on the sales day book, credit sales, cash sales, then fuel surcharge. Yeah, that's the one output I said, fuel scale, less VAT on credit note. I will take you to the question again and show you. Like, this is from the credit sales day book, and from the cash book, the VAT. It's all coming from VAT account, but only this this bit is coming from the bottom. There we go, the arrow I did, adjustment. But rest coming from the VTT account. How many? 1, 2, 3 on the output VAT. I'll take you there. Too many things I have written. 1, 2, 3. Hope it makes sense, people. Yeah. 3 items I have taken as my output VAT, because all this relates to sales, and all the sales and VAT I've taken, less sales return. Done. And the fuel scale, I've taken it here. There is no error adjustment. If there is any, would have taken it. Yeah, which makes our liability higher, VAT liability. Box number 2, 651.2 EU acquisition. It's just a copy paste. Box number 2, look at the, again, I'm doing it and highlighting it, EU acquisition. Yeah, I have written it already for you people. That is box number 2. 651.2. And how do you get the box number 3? It's the addition of 1 and 2. Means this 1 and 2, you add up and you get box 3. Output VAT plus EU acquisition, you get total of box 1 and 2. Coming back to box 4. Box 4, all the purchases, VAT, less purchase return, plus any bad debt relief, plus any adjustment. Look at this, VAT from purchase day book means credit purchases. Then VAT on EU acquisition, VAT on EU acquisition as well, yeah? That's a part of purchase. Bad debt relief. Now, less the VAT on credit note. This 1 and 2 coming from the VTT account, doesn't it? Taking you back to that VTT account. 1 and 2. Purchase VAT, purchase VAT of purchase day book, and VAT return of the purchase day book. 2 items taken, and other 2 items are taken from where? Here you go. 651.2 pound is your EU acquisition, and with bad debt relief is your box 4. It goes in it. 195. Yeah, there you go. 651.2 and 195. When you add up, you get this 4238.2. Okay, now you know what to do with box number 4, net VAT due, because it's the box 1 is high, or the box 3 is higher, but the box 4 means liability is higher, output VAT is higher. You get 5. Boom, job done. Like 50, more than 50% job, you have done it. For the next 50%, you are just going to get your total sales less sales return, total purchases less purchase return. Yeah, total sales less sales return, total purchase less purchase return. Look at this. Credit sales into the UK, we got that much from the sales table. Less sales return, cash sales is there, European Union dispatch is there, there's some export there. So again, I'm making some number. Standard UK sales 1, then cash sales 2, EU dispatch 3, export 4, and this return I'm making it 5, where I'm copying and pasting it. It's just a copy paste from the information given at the top. Okay, that's the one. 1, my UK sales. 2, EU dispatches. 3, export. 4 is my cash sales. I hope the order is correct. And 5 is the sales return. That's it. That's how you copy paste and get your figure. 7441. 74041. That's box number 6. Box number 7 is all purchases minus purchase return. So yet again, purchase number 1 is my UK standard rated credit purchases. EU acquisition is there, which is number 2. There are some input could be from outside of the country, and EU is number 3. And I have return of 4. I'm taking you to the purchase daybook information from the purchase T account. There we go. Purchase and purchase return 1. UK. Maybe this is 2 and 3. If it is not just a shuffle, and this is definitely 4. Yeah, this is the information copied and pasted in my box number 7. Boom, and you get the where's the total? 22,436. Taking you back. 22,436. That's my balance CDBD. Yeah, CD becomes video on the other side. It didn't do it, but yeah, that's how you normally do. And finally, box 8 and 9 is the easy peasy one. UK sales means dispatches, and EU acquisitions means purchases from EU. 9,700 and 3,257. I'll take you there. EU sales 9,700. EU sales. That's my EU sales. 9,700. A big circle. And EU purchases, this is my EU purchase, 3,256. And then the final figures you put in it. Final figures of box 1, then acquisition, then adding up these two gets you box 3. Box 4 is the final figure of your input. Box, then you minus output minus input equals to get box 5. Total of your sales, less sales return. Total of your purchase, less purchase return in box number 7. 8 is EU sales, and 9 is EU purchases. That's it, people. All you need to remember that which one goes to what boxes. One quick information which I would like to tell you, which you're going to see in few minutes, next example, not example, next activity, next test your understandings, that this time, for example, let's assume this 9,700 EU sales is given in one go, but there could be 2, 3 of this, then you need to add up. So that's the sales is just total sales given. There could be 2, 3 sales. So add up together and get your total sales. In short, total sales and total purchases. And if you go with the flow, it will make sense. You will understand, okay, I need to do it. And more practice will help you. Yeah. So that was the discussion. I'm giving you, just before I go to the next activity, look at this, activity 5. And you need to do this small A and B. B is the bigger one. And then little bit of theory, end of the chapter. So I'd like you people to do this particular question. Let's read it for you people. You can take help from your example, wherever you want to take from the take the help, but don't look at the answer if you have any. VAT exercise, activity number 5. The following details have been extracted from the day books of David Limited. Sales, UK sales. On different dates, sales. So when you add up, you get the total UK sales. Just keep it as simple as it is. EU dispatches means EU sales. We add up on the different dates you're selling it, you get the EU sales. Purchases, you got UK purchases, so just add up, you get total UK purchases. Now after that, there is no more acquisition, like no more purchase from the European Union. Can you see it? Yeah, I can't see. There's no EU acquisition, so you should not be bothered about it. If there is none, write 0. Then the VAT stuff coming in. VAT, you get the total VAT on the sales. Yeah, and you get the total VAT on the purchases. This should be UK, this VAT. Then they're giving you bad debt relief on sales invoice. The total invoice is 85.41 including VAT. So you got to be a little clever here. Find out the VAT amount. How much is the VAT amount? That should be gone into box number 4. Yeah, as an addition. Returns are completed online. We're going to talk about it next chapter. Like, yeah, we do online return nowadays. Sorry, in this chapter, we're going to talk about MTD, making tax digital. Okay, then VAT payable receivable is settled by electronic bank transfer, even better. In addition to the above purchase, the company acquired goods with a value of, there is a European purchase. Aha, see the notes. There's a EU acquisition of 4,500 from France, from a French supplier. So it's an excluding VAT. So you need to do the VAT here at the rate of 20%. And that would be your VAT on acquisition. So there is a VAT on acquisition then, yeah, from EU purchases. Today's date is 15th of January. And yeah, don't worry. You can do it easily. First, asking you calculate and insert the figures to be reclaimed for bad debt relief. At first, give me that answer quickly. Bad debt relief. I can tell you the invoice is 85.41 including VAT. How much should be you get bad debt relief? Gurjinder got some answer. Let's see what people get some answer. Okay, Gurjinder, give me the, how did you do it? How are you getting it? Dave got the almost similar answer. 1 pence up and down. Yeah, round it down. VAT rules are rounded down. Yeah, don't round it up. Coco and Jordan, everybody's getting Allah. Round it down. 14 point, thank you, Gurjinder, 14.235. So please take it as 14.23. Yeah, that's the rule. Round it down. Don't take it as 14.24. 14.23 should be the answer. Thank you. Thanks for giving me that answer. Actually, that goes, thank you, Payal. That goes into A, but that goes into box number what? Tell me. 14.23 goes into box number what? Okay, super duper. Dave, Coca, and Gurjinder. Fantastic. And Payal as well. Yeah, it is box number 4. I hope you people are ready to jump into the question, are you not? It's all you. I hope 10 minutes is fine. Yeah, I'm giving you 10 TikTok. My camera will be off. TikTok will be on. There we go, the TikTok. Is there anybody who needs the question picture? If you need, I can scroll up and down. Or if you have the questions already, paperback, I believe you should have, then get started. If anybody needs the picture, I can scroll up and down just for your help. Do you need? Nobody's writing. So I think all of you got a paperback book. Emma says, yes, please. Okay, Emma says, yes, please. Means you need, so that's Dave. So people, please buy a book, yeah? Come on. We are on almost this last lecture. Okay, I'm giving you some time. Take one click here, please. I hope the one click is done. I'm going to the next page now. And the next page is here, killing some time for you people. Just making sure that you have taken a picture. Take another picture here, please. UK purchase, VAT on output tax, VAT on input tax, and little bit of adjustment. I hope the picture is taken, the going bottom. Although I have, take another picture here, please. But to leave the adjustment and so many things. Requirement A, already done A. Then I'll give you 5 seconds. I'm going to the bottom. I hope the picture has taken. And this is your answer. The final picture. Take another picture, please. Here, the final picture. And that's it for working. Use scrap papers. Okay, tick tock, almost 2 minutes. You still have good enough time. Don't worry about 10 minutes. Just do it steadily, easily. Don't worry about 10 minutes. Normally in the exam, you can get 20 minutes to do this type of questions. I'm sitting here. Anything you need, just text me. Thanks for enjoy. I'm going to enjoy my next 10 minutes, but sitting here. So 6 more minutes given until 16. Keep trying your best. Okay, people, give me some answer. What is box number 1? Box number 1, please. Payal says that figure. So does Xavier. Super. So does Oksana. Okay, thank you. I'm writing those figures. So does Dave. 13. Okay, you basically, that goes down for 136056. Okay, Coco and Kujinder, thank you. 136056. 13960 96056 96056. Number 2. Number 2, please. What is number 2? More people. Ooh, Oksana. Oksana got 0. No, it should be some figure. It should be some figure. Coco got even different figure. It's only the VAT, Coco. I don't know what you have added with. Okay, 900. Let's go to that one because you had a question with that. I'm showing you European acquisition. You know, the 4,000, taking another color pen for you people, green, 4,500. And that is excluded, even I said, yeah, VAT excluded, I said here. So 4,500, if you do 20%, that's your VAT on acquisition. How much is that? Taking a calculator on screen, 4,500 times by 20%. And thank you, the 900 people. I hope those of you who did little mistake here is making more sense. And the European acquisition is going to be 900. All right. Thank you for the 900. Writing it down with my red pen. How much is the box number 3? Please amend the box 3. Those of you who had a mistake. How much is the box number 3? Box number 3, please. More people. Okay, thank you. 148.60. 148.60 point what? You know, this goes, keep going. And 48.60.56. 0.56. Let's assume there's a point. All right, super duper, well done. Box number 4, an important box. What's that? Box number 4, how much is that? Okay, Pabla got some figure. Thank you. Maybe wrong, maybe right. Don't worry about it. Yeah, Pyle, Sabatlena, Xavier, everybody's getting similar identical. I hope that's the right answer then. I'll check the answer anyway, but I'm taking the most identical answer from you people. So 1024035. 10240.35. How much is the net now? This minus that, isn't it? How much is box number 5, please? Okay, super duper. I got already 3 identical numbers. 4620.21. 21. Now that's one part, isn't it? One big part, in fact, one good important part. Another part coming in, number 6. What is the figure? How much it should be in number 6? The sales, less sales return. All the sales, yeah? Just all the sales together. Take all the sales return. Only one would be, if there is any. Okay, now getting some 2 identical, 3 identical. Good. Okay, I will take that answer. 77002. 77002. 77002. All right, moving back to number 7. How much is that? That's also important. Got from Pile 51130.63. Who else is giving me some answer? Okay, Pile is wrong. Yeah, people are right. Why Pile is wrong, you know? If you remember the word I said to you, you cannot take any penny in these boxes, isn't it, Pile? Yeah, so don't take it. Round it down to the bottom one. Okay, 51130 is the answer I'm going to take. I don't know the answers are correct or not. It's the most common answer I'm taking. If there is any discrepancy, I will go and check it out for you people. So you might get wrong, but do it. You can get the explanation. Do you understand me? 51130. 51130. Okay, number 8. it should have something in number 8. It should have something in number 9. At first, I thought there is nothing in number 9, but there is something in number 9. Number 8 first. Number 8, Savitlena says 7201. So does Xavier. So does Pyle. So does Dave and Coco and everybody. So taking it, the answer 7201. 7201. 7201. Yeah. And the last one, please. Easy peasy lemon squeezy, the last one. European acquisition. Yes, exactly. All of you are right. Yeah. Thank you. 4500. 4500. Boom. Let's check the answer then. Yeah. I got the answer here. Do I? I should I? Okay. 1396056. Yeah, that's right answer. I'm taking another color pen just to mark it. That's right answer. This should be right. This, I said it. Yeah, 900 is right. 14860.56. It's right. 10240.35. 35 is right as well. Up, not right means here it is right. Then 462.0.21. 462.0.21. Yeah, right. 72.51130. 72.5130.